So this video is going to be very exciting because today we're going to talk about two very important key levels that are support or resistance and supply and demand, and we're going to talk about the differences that exist between them. Hey guys, welcome back. So in this video we're going to talk about the two key levels that are mostly used inside trading, and we're going to talk in detail about what is the market structure behind them and what is the trading psychology behind them. So we're going to talk about the support and resistance and supply and demand and their differences, okay, because both of them are very important and people use it for different purposes. So first, here we can see that first we're going to go through what are demand zones. Now, as I said, the market structure of a demand zone or support zone is very different, and also the trading psychology behind a demand zone and support zone is very different. So first we're going to go through the demand zone. In this case here we can see that this is a demand zone forming here. This is a rally base rally demand zone. Now as we can see, this consists of three market phases. The first phase is the rally, then second one is the base, and the third one again is rally. So in the first and third phase, the market is in very good momentum, or the buyers are in very good momentum who are pushing the market in the bullish direction, okay? But in this second phase here, the market gives a kind of pause where the market is making a range. So with the first phase, the market is in very big bullish momentum, then there's a pause, and after that there's again a very big bullish momentum. So the institutions look for these trading zones or these demand zones to put their pending buy orders so that market can come back in future in order to pick those pending orders. We're going to talk about it in detail later in the video as well. Now here, this is the second type of demand zone in which we can see that this is a drop, base and rally demand zone. Now in this demand zone, the market structure is that in the first phase, the sellers are in very good momentum, okay, and they're driving the market in the bearish direction. After that, there's a pause or there's a range in the market in which both the supply and demand are balanced, but here again a lot of buyers come in increasing the price, okay, raising the bullish trend. So this is a drop, base, rally demand zone, and the institutions look for these zones in order to put their pending orders so that they can be picked up by the market in the future, okay? So this is the market structure of a demand zone. Now let's talk about what is the trading psychology and how institutions use these demand zones for their trading. So once a demand zone is created, as you can see here, our demand zone would be around the high and low of the base candles or the base region, okay? And what institutions would do, they would put their pending orders at this demand zone. So after the formation of the demand zone, the market is likely to come back here in order to pick those pending orders that are placed, and then after that it will again give a very big bullish move, okay? So this is the trading psychology behind the demand zone, and similar is the case here. In this case, the drop, base, rally demand zone, the institutions will put their pending buy orders at the top or high of this base zone, to which the market will come back in the future and it will pick up those pending orders and then again move in the bullish trend, okay, with a very good impulsive move. And these lows of our demand zones act as our stop loss or levels as well. So this is the trading psychology and this is the market structure behind a demand zone. Now let's talk about the support zone. Now these zones or support zones are very dynamic because you can find them at any place where the market is bouncing back from a certain level, okay? It does not require a specific type of market structure in which we have to look for any percentage of like the body or percentage of candle or anything. These are the levels that are very interesting to the market or very interesting for the buyers, because buyers use these levels as a reference to where they can place or they can rely on, okay? So here you can see the market is in bearish trend, and after that it bounced from here and went in the bullish trend. Now again, after market came back to this level and then again it bounced back. So this level is interesting for buyers because most of the traders are using these levels, and market is bouncing back from this level again and again. So what happens is the support is there which is rejecting the price, and it doesn't let the price to go any further down from this level. So that's why the market keeps bouncing. So here sellers push the market downwards, but again the market finds a support at this level, okay, and then it bounces back. The sellers come back again in order to break this level, and then the support zone supports the market, and the market again goes in the bullish trend. So the sellers are not able to take control of the market or break this zone. Now with time, of course, like the more the market tests a certain zone, the more weaker it becomes. So with the time, this zone will become weaker and weaker, and ultimately it will break. But you can see the market structure of a support zone is where the price is getting rejected again and again, and market is coming to that zone but again bouncing back. Here you can see that there are 4 price bounces at this support zone here. So this is the market structure, and the traders, these levels are important to traders because they use them to put their buy orders, okay. Now let's go through the charts in order to see some real life examples of how supply and demand zones and support or resistance zones are traded. So let me just go to his charts below here. And here we can see the formation of a support zone, because we can see the market is getting rejected from this level again and again. Here you can see this is the first touch, second, third, fourth. So like the market is coming down, but it finds a support at this level. That's why it gets rejected. The sellers get rejected, and the market goes in the bullish trend again. Now again market comes back to test this zone if it can either break this or bounce back. So what happens is it bounces back because the market finds a very good support at this level. So this is the support zone, okay. And the market structure, as I explained above, is that here this level is interesting to buyers because a lot of buyers would be willing to put their buy orders at this level, okay, or use this level as a support in the market. And here we can see that this is the demand zone. We also have a supply and demand zone indicator which you can use in order to detect the supply and demand zones automatically. I'll put the link to that in the description, so please make sure to check that out as well. So here we can see the formation of demand zone, that is our rally base rally demand zone. And now, as I explained earlier, once a demand zone is formed, the market will come back in order to pick the pending orders from that zone. So here you can see the demand zone is forming here, which is rally base rally demand zone. And after the formation of demand zone, the market kept moving above that demand zone, but ultimately it came back in order to pick the pending orders, and then after that it gave a very big impulsive bullish move, okay. So the supply or demand zone is fresh until it's picked, okay, until the market comes back and picks the orders and goes in the bullish direction. And here in case of support zone, the market keeps retesting that zone until it breaks it, okay. So these are 2 main differences that exist between support zone and demand zone. Now let's talk about the resistance zone and the supply zone. So let me just go here. Here you can see that this is the resistance zone forming here, in which the price is getting rejected. The buyers are trying to break this level, but the price is getting rejected again and again. Let me just zoom in. So here you can see that price is getting rejected and market comes back but gets rejected and then again moves in the bearish direction. So similar to the support zone, in the resistance zone, the market keeps retesting that level, okay, and this level is also very important to the sellers. And here you can see the formation of a supply zone, in which we can see that this is a drop supply zone. And after the formation of supply zone, the market came back in order to pick the pending orders at this level once, and then after that it gave a very big bearish move. So if I want to put it in a nutshell, it would be that at support or a resistance zone, the market keeps retesting those levels, okay. But in case of a supply or demand zone, the market, once the demand or supply zone is formed, the market will come back in order to pick that pending orders that are placed by the institutions, and then it will move in the, if it's a demand zone, it will move in the bullish trend after picking the buy orders, and if it's a supply zone, the market will pick the sell orders or pending sell orders and move in the bearish trend. So that is the main difference between support and resistance and supply and demand zone. Be sure to check the supply and demand indicator in the description, and I hope you guys like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to subscribe, and see you guys in the next video. Thank you.